everyone to today's edition of Frontier Opening Bell. I am Bosin Amofaye. Let's get today's show started. Thank you very much for joining. Ali Khan Saju, the CEO and founder at Reed Frontiers Management in Nairobi. Morning, Ali.
Pleasure, Bosin. Thank you.
Good to have you as always here on the program. And of course, Uchenna Minis, who is the managing partner at BlueFX Nigeria. It's good to see you, Uche. Okay, thank you. Then let's just say good morning as well to Chinma Okadike, who is the consumer goods analyst at Betiva Capital Management. Good morning.
Good morning, Bosin. It's good to be here.
Thank you all for congregating together for today's edition of the show. Let's get this started, taking a look at the some of the African equities markets, taking a bit of some of the beatings from the global risk sentiments that we saw on the second trading day of the week. Tuesday, Nigerian market was about 0.3% in the positive territory. The South African GSE was a bit bigger, about 0.75%. Right in the middle, you can see the Ivorian market, the Egyptian market, and the Kenyan market in negative territory. The Kenyan market ushered index down a whopping 2.07%. So look at East African markets. What are some of the big stories? The Nairobi Coffee Exchange now comes under the oversight of the Kenya's Capital Market Authority. Yesterday, Ali spoke about the WPP scan groups. A share price rallied strongly, and that gave the NSE a very big fillip. Meantime, the countdown to July 29 monetary policy meeting of the Kenya Central Bank is on tap. In the corporate news, I&M Holdings shareholders at 2.55 shillings dividend for full year 2019. Mauritius reporting inflation down to 1.7% in June. That's the story. Ali.
Yes, so thank you. Let me just start with the report that you were referencing yesterday, which is the African Development Bank supplemental report, the January big ticket economic outlook. And just to mention two things from there, they were talking about a downside full year forecast for minus 3.4% for sub-Saharan Africa. That was their downside. They had a higher upper bound forecast. Essentially, I think the downside forecast is what is my baseline scenario. And I think they were a little bit too optimistic about East Africa. They had East Africa as the brighter area within the context of Africa. Egypt also they were quite bullish about. But I think they're too optimistic about some of those East African numbers. But to get to the report, the CMA was taking over the coffee exchange. You know, we were once a huge producer of coffee, a very high quality coffee. Today, Kenya's AA coffee is the one that people used to blend into all the other coffees, highly sought after, but our production has collapsed. It's about 25,000 metric tons, which isn't very much. And the coffee exchange is a little bit esoteric these days. You've still got that old-fashioned call-over trading system going on there. But really, in terms of the importance to the economy, Uganda produces much more coffee than we do. As we've talked about WPP Scan Group, this was the sale of Millward Brown, one of their subsidiaries, more into not pure advertising, but into consumer analysis, into consumer behavioral analysis. They've sold that out and pretty much paying out all the proceeds, not looking for reinvestment elsewhere. Kenya's MPC to meet Thursday, July 29. You know, the problem I think in Africa is it's working for the governments because you're stampeding people into the T-bills with these low rates, into government bonds, but the transmission to the real economy is not happening. So you can continue cutting rates, but it's not stimulating the economy in my view. And I'm sure I think this probably applies to Nigeria as well. Plus, I think we've got currency issues now. We've pushed rates low enough. If we start messing up anymore and cutting rates beyond reasonable expectations, I think it's going to be a challenge for the Kenya shilling. I&M, one of the top 6 banks, announcing a dividend, which is good because so many banks have skipped their dividend, which shareholders dislike intensely because they miss the cash flow. Mauritius, inflation dropping to 1.7% in June. I think this is just a case of this demand and supply shock that we're facing. Mauritius is pretty solid on the food side, so food prices haven't gone up there.
Okay, thank you, Ali. Let me allow Uchenna to weigh in a little bit on the global negative sentiments on Tuesday that we saw for risky assets like equities that went into some of the frontier African equities markets.
Right. Also, I think we're starting to see some level, some degree of convergence in terms of fundamentals and basically the euphoria we see in market prices and asset prices. The reality sort of started to precipitate in that insolvencies are starting to pick up in economies in developed markets. Companies are starting to file for bankruptcy, and also the reality of the liquidity injection, the PPP, the payment protection, paycheck protection program. The reality of it sort of highlighting that it did not translate to the real economy. It was just a situation whereby corporations that sort of passed the test will sort of receive such aid, and that in itself is showing that employment in itself, labor participation also have been seeing significant decline in volume. That in itself is highlighting that the V-shaped recovery, as I mentioned last time, is entirely a political statement. The reality is starting to show some of this central bankers are starting to say we are looking more like a possible U-shaped recovery. Some will say a W-shaped recovery as it is. So it is not all that clear for investors to just jump in. That in itself is starting to see, and caution is starting to come into play. BlackRock, sorry, but BlackRock, who is supposed to be the financial institution that has gone having a joint venture of some sort with the Treasury in terms of buying corporate bonds for the Federal Reserve, I sort of highlighted that and sort of the downgraded equities in the US from overweight to neutral because the risks are starting to precipitate. Congress is looking to set up a possible stimulus bill ahead in August again, another possible $1 trillion in that regard. So it is in that place whereby the reality is looking and is coming into the market, and that's what we are seeing in terms of very sentiment that's being priced into the market.
Interesting. As an FX trader, Uchenna, we'll get back to you on Nigeria's central bank FX adjustment. I got about one question there for you within the show time. So just hanging in there. So let's dig in a little bit more into the West African Nigerian markets. We saw the stock market took a bit of a green shoot yesterday, 0.3%. The banks were still the major place because UBA announced the appointment of 2 new deputy managing directors for Nigeria operations in Africa. These were 2 new positions, managerial positions, top management positions created by this big lender with footprints across 20 African countries. Meantime, central bank officials told Frontier Africa reports this morning that there's more to do beyond the recent FX adjustments. Traders and analysts say this was a good show of hand by Nigeria's regulator, bringing the official rate to 381. Yesterday, 5.5% adjustment, on top 5% down through a Friday FX auction last Friday. So the official says the central bank is done with those adjustments and now waiting to see how the market will respond. In neighboring Ghana, the budget deficit will reach about 10% in full year 2020. That's much higher than the ECOWAS headroom or the limit of 4%. Meantime, the Pan-African lender, EcoBank, sitting in Ivory Coast, says it's paying 353 CFA francs as final dividend for the full year 2019. So let me just ask Chima here to weigh in on the Nigerian trading in terms of the consumer goods side. Is anything changing from what we've seen so far? Stories from PZ Croissants, from Nestle. What's your play here?
Thank you, Gossin. Like we said before, we don't really see anything changing from what we expect or what we have been saying over the past 2 months at least. So recent data from Nielsen, Consumer Confidence Index was released, and it showed that consumers were really showed very low confidence in the economy. About 80% of consumers in Nigeria around Q2 said that they were going to save more, and 50% of consumers do not see themselves earning above or even around the same level of income that they were earning pre-COVID-19. So this just reinforces what we have been stating and what we believe. We see that the recent pandemic or the recent happenings with the pandemic and all would really affect income levels. Has already started affecting income levels, has affected businesses, and so that will trickle down to income levels. And we see that playing out in the consumer markets, in the consumer space. So we don't see anything really significant changing. We still expect a lot of these companies to post poorer performances compared to prior years and prior quarters. This is really what we still expect for most of these companies. However, I should say that we do not see. So we expect this trend to just vary across the various consumer segments. So for food, for brewery, and for HPC. So for food, we expect it to be hit, but because food is a necessity, we don't expect to see a lot of. We still expect to see stable demand, although we expect to see consumers down tier brands from most of these premium products listed on the stock exchange to unpackaged food products. For the brewery sector, we've already mentioned that we expect them to be the hardest hit. But for the HPC segment, given the ongoing mandate to continuously practice hygienic measures and to continuously wash hands and be safe, we expect the HPC segment to see stable demand and stable revenue flow.
Okay, great. I just want to ask if you folks at the Tiber Capital have some thoughts around the latest central bank FX rate adjustment.
Well, yes. So we like we said, we believe that this recent adjustment is like a show of good faith, like you said, by the central bank, in line with the mandate or the request from the international loaning parties for the about $3 billion loan that we are requesting for. So we had seen that, or news over about 5 days ago said the rate at the SMIS markets had been increased or changed to about 380 from 358. So we see that these measures are just moves towards the unification, like the CBN had earlier pointed. And we think that this will just promote transparency, because like we have been seeing, a lot of these foreign portfolio investors had been trying to leave the Nigerian market, trying to leave the equity market, and they had been met with FX liquidity constraints. So we see this as a move towards more transparency. When the CBN is able to unify these rates, hopefully we can get a loan, and then we would have a lot more increased liquidity to maybe then supply to the foreign portfolio investors. So we see this as a good sign towards that.
Interesting. Thank you, Chima. Let's touch base with the Southern African markets. The GSE picked up some green shoots on Tuesday, the second trading of the week. Of course, the correlation between South Africa and other emerging markets is there. Meantime, Naidu is a member of the SARB, that's the Reserve Bank, says the country's debt is near an unsustainable level. And on another punch from Fitch, saying South Africa is very poor at keeping its budget promises, whether on debts or other parameters. Meantime, job cuts is continuing. NASPAS says it's going to shut down some titles, it's going to cut about 500 jobs. Massmart, which is supermarket, says it's cutting 1,800 jobs at the game stores. All big stories around this big economy. Ali.
Yes, so just starting with your first story, South African debt levels, obviously all projections are that it's going way north of 100% and peaking, it seems, most scenario analysis is saying 120 to 125% debt to GDP. So, you know, what Mr. Naidu is saying is what everybody knows. And at the moment, you've had this circuit breaker, COVID-19. Countries have got to try and stabilize their economies as best they can. But you know, there is a great big hole that everybody's digging themselves into, and how they're going to come out of it, from whether it's the United Kingdom, South Africa, or anywhere else you care to mention. There is no plan at the moment. You know, whenever I listen to the chief economists of the African Development Bank, the IMF, they say, you know, the plan, let's get the health right, and then we'll worry about what's going to happen down the road. You can keep kicking that can, but at some point you're going to run out of road. And of course, timing when you run out of road is a different matter, but at some point we will. So I think Naidu was stating the obvious. I think very mercurial Tito Mboweni, using that hippo analogy, stated it as well. And Fitch are then reiterating, look, you guys don't even keep the promises that you make, which is true as well. You've got the story about Massmart, and you mentioned Naspers as well. Let me start with Naspers. Naspers basically united the long knives of their media assets in South Africa, not unlike what we've been seeing in Kenya and East Africa. You know, the worst performing shares of the Nairobi Stock Exchange are Nation Media, one of the oldest, most venerable media companies here in East Africa. And this is really, I think, a Schumpeter moment for the media segment globally. I mean, if you can't pivot to digital, if you're still relying on print media, my view is you're toast, really. I mean, the world has moved on, and if the model is still on that sort of offline model, it's not going to work. And I think what we're seeing is some folks who try to get ahead of the curve. The New York Times did it very well. Trump helped them. Washington Post, bit more difficult in Africa. I think you've got to make it a very micro payment model. So it's like 1 US cent per whatever, but you've got to start going down that road. I think Naspers just basically have decided that it's not worth the candle. Massmart, I was surprised at, because actually supermarkets so far, in my experience in Kenya, have done well. People are continue to spend money on food and on your necessities. You might be cutting back going out to the restaurant. So I was a bit taken aback by Massmart, but I think that's a signal within the South African market. They're not as competitive as they might be. And then Angola agreed with OPEC to fully cut oil output in Q3. I think, you know, this is behind OPEC compliance. The market is sort of most reports are now saying it's coming better into equilibrium. So I think the pressure might ease off, given Angola's got other challenges and they do need to sell as much oil as they can at these prices in order to make payments. But they're one of the countries that benefit very well from that World Bank moratorium that's being offered. They are one of the key beneficiaries if they take it up.
Quite a very profound way of looking at Southern Africa, and some of the stories looking like a photocopy of the Kenyan story when you look at the media, Naspers and Nation Media, conglomerate. Everyone is going digital. Financial Times is doing that. It's making money already in the UK. I've already well implemented pay-per-read, pay-per-view, whatever it is, digital publication, digital media is the new world we live in. Thank you, Ali. Quick one, Uchenna, on Nigeria's currency. I want to find out, because you're a currency trader and you see these numbers and get market sentiments, market hearsay. What's going on the street? What are traders, online traders, saying about these FX adjustments by the central bank?
Basically, with the FX adjustment, as Chimas rightly mentioned, it's more like a step in good faith in terms of unifying the exchange rate as it is. But investors are still very, very wary, given the overall sentiment in the country, really. and our dependence on oil sales, and also how liquid we are as a country, really. And that in itself has sort of given that cautious outlook when it comes to Nigeria in terms of investing and business sentiment. So I think we need to get to that place as a country whereby the cloud is no longer dark, whereby investors are being confident as to what the policies are being put on ground as regards to monetary and also fiscal policies. I'm not really hearing anything in terms of our government fiscal policies as to elevate what is currently going on. One thing I'm going to try to reiterate in terms of these job cuts amongst, should I say, retailers and supermarket behemoths like Ali was addressing, is that right now industries, companies are looking to do more with very less. It's more like an adaptive measure, really. So it's not exactly, it doesn't exactly translate that they are not doing well. It's just saying, well, if we can achieve this much while majority of people are working from home, then why do we need to have all those people literally be available in terms of their job roles and job positions, really? So I think that is where we are going to, and that is why the concept of the V-shaped recovery is really just a myth right now, because a lot of companies, a lot of jobs will not come back. And that's the reality of it. And what is happening, despite what we're seeing in terms of job additions from last released non-farm payroll, we are seeing that the permanent job losses are increasing in the US. And that is just highlighting that a lot of people, a lot of firms, a lot of companies are looking to do more with so much less. And that is what we will really be looking at, should I say, in our near term in terms of risk.
Yeah. Yeah, interesting day. Today is Wednesday, the third trading day of the week. So I'm gonna give one of you, my panelists and analysts, to give us 1 minute of your thoughts about today's trading day. What's the big story? Your outlook, Chima, Ukadike and Retiva Capital.
Thank you, Boston. So we just expect the market to trade mixed today. We've seen for the first trading session of the week, Monday, it traded negatively. Yesterday, we were able to come to positive territory, mainly based on bargain hunting on Airtel Africa and Boa Cement. So we saw the market move into the green territory. We expect that because nothing really has changed, fundamentals of the market have remained the same. We still have the challenges that have been facing the markets the same. We just expect to see investors bargain hunt and profit and take profits as well. So we expect investors to look out for the fundamentally sound stocks, to bargain hunt them, and to just try to take profits on some of the stocks that may have gained over the past two sessions or past week or so. So we just expect investors to we expect today's trading to really be mixed. That's it for today.
Next, what's your take, Ali, in terms of where? Thank you, Chima. Ali, what's your take on the East and Southern African markets today?
So in East Africa, obviously in Kenya, we've had this relaxation of some of the quarantine. Nairobi is now open. We can leave Nairobi, which we weren't allowed to do before, and Mombasa, so the two biggest cities. And at the same time, we've had this big surge in numbers. We're hitting a test positivity rate just below 10%. So we're opening up the economy at the same time as we've got our numbers going up. So I think, the market might bounce a little bit over the next few sessions, but I think ultimately we're going to get caught out here. So there's been a tremendous price correction. I was going through some of the stock prices, banking stocks down 30, 35% year to date. But at the same time, I think the thesis that investors have had is, okay, they restructured for 3 months, and somehow we're going to get out of it after that. We're not. I think the 3 months is actually, at the very least, a 12-month restructuring exercise. And I'm not sure that's priced in yet. So I think overall, a little bit of we had a bad session yesterday. We're going to base around here, but there's still, the bias is lower, in my opinion. down in Johannesburg, it'll depend on the Dow, but the Dow's looking a bit rich to me now. It's been a humongous rally. Really, on P ratios, this thing is off the charts. I mean, if you're buying it now, I think you're in the casino. You're playing roulette. Yeah.
Casino on Wall Street. Ali, thank you. So, Uchenna, what is your FX play for today? As to expect, the US EIA reports at about 3:30 local time.
Right. We saw a significant build in inventories yesterday from the report on US crude. I'm believing we'll get to see some figures in that vicinity. Oil is in that positive territory, but right now just sort of stagnating and not looking for the next fresh, should I say, factor or variable to sort of determine its next move in terms of price valuation. I'm looking generally because of the market, the high risky assets, the Dow, the S&P, and NASDAQ. There is a high belief that NASDAQ has literally decoupled from the S&P and Dow, really given the fact that all this top, should I say, giant companies in the US have sort of been doing so well. Tesla literally has more money, basically in terms of market cap, than Ford, GE, Toyota combined. So when you look at such level of decoupling, you understand that there's something significantly wrong. We believe that the market has sort of topped in June because we're seeing some little bit of liquidity, should I say, withdrawal, and the Fed would not need to. We'd need a very, really significant reason to start another aggressive level of quantitative easing. There's that political talk now as to what you're doing is not really translating into the real. That in itself is creating that grayness and as to what else they can do. So in terms of the FX and currency play, I'm looking at the dollar that is going to continue to be suppressed in the near term. However, I still have mentioned over time on this show that the US risk the rest of the world growth differential would still push the dollar into that bullish place. Gold in itself is also a safe haven that investors are looking to pile in at the moment. We are trading at that resistance area of $1,800 per ounce, and that is going to look quite viable if you get a bit of retracement to the downside. It's looking really good for investors to just pack up on their front. There are a lot of monies on the sideline right now because a lot of people don't really think this market is really that place of frenzy, as Ali has put it. Really, we're just running a casino.
Interesting times right now at the marketplace. On Wall Street in particular, we've seen a bullish run on the NASDAQ. Everyone agrees on that. I'm sure Ali was on the NASDAQ, on S&P, and the Dow. And everyone is asking if there's on Wall Street. China has its own story, a very big jump over the last few sessions. Everyone is asking, where is the money coming from? Where is this animal spirit coming back from? And where is it heading? Is anyone's guess? Let's wrap it up, everyone, with just one or two stories from the North African markets. Egypt, National Bank and the IFC International Finance Corporation, that's the private sector lending arm of the World Bank, signed a deal to fund the solar-powered water pumps in the North African economy. That's good news. Meantime, Egypt reported its net FX reserves at $38.2 billion in June. That's slightly higher than the figure from the month of May. Let's leave it there for today. Thank you very much, everyone. Ali Khan Sachu in Nairobi, thank you very much from Rich Frontiers Management. Appreciate your time. Uchenna Minis, the managing partner and FX trader at Blue FX Nigeria. Thank you so much for coming through. And of course, Chinma Ukadike, who is a consumer goods analyst at Vectiva Capital Management. Thank you all. Have a great Wednesday. I am Boston Namofaye, and I'll see you again tomorrow.